The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday, Wednesday, Friday, 11 o'clock till noon Eastern Time. And, in fact, I will also have the pleasure of doing Tom's 4 o'clock show tomorrow afternoon, Thursday afternoon. And just want to wish Tommy best of luck with a little procedure that he's going through. And I guess Tom will be there to help out. So thank you for the opportunity anyway to be able to do that. Now, also thank you to Steve for a fabulous 2 hours leading. Don't forget, Steve has an all-day webinar coming up this Friday, and you can go to the front page of TFNN and check it out because, you know, he's got absolutely fabulous techniques that he puts together, as well as a plan of action that he teaches, which is really very insightful and extremely helpful. I know that people have mentioned it. Many people have mentioned it. Now, I also wanted to mention that 11 o'clock to 12 is benign on Monday, Wednesday, Friday. Monday and Wednesday, after my show, you have Larry Pesavento, and I'm just really interested in hearing what Larry has to say, because so far what he's been talking about in terms of the cycle top and the window of opportunity to pull back has all occurred in the market, and I'd like to hear what he has to say, because bonds have certainly had a rally and the TBT has come down. So let's do this. A couple of things I wanted to talk about. One is I had mentioned at least a year and a half to 2 years ago that, and this particular phase, as I look at the different what can I call worlds that I live in and participate in, the art world, the modern art world, should have a very powerful move to the upside. Well, we've just seen that with that $119 million purchase, highest price for the Scream, Munch's Scream. And then you had in New York, and this is very interesting, never been done before, the Freeze, I think it was called. It's really a conglomerate of galleries that put together contemporary works of art. So that's been going on. Contemporary architecture is starting to come back. And this really fits in this whole picture of mine when I've been talking about the bubble in the arts world. And that is in the arts. How can I define this? It is in the galleries. It is in the museums. It is in the spaces for performing arts. Everywhere you go, I get emails from people all over the world talking about how their local town has suddenly built this beautiful art center. I love that for the future, but right now it's telling me a story, and this story says that there are a bunch of things that are coming together, and the things that are coming together right now are very similar to very major financial turns in the market. At the same time, we've just really had 10 years of major market turns. So is this going to be a rolling correction where one by one we look at sectors, whether it's in the arts, whether it's in economic fields, whatever it is, as they rotate through boom and bust, boom and bust? Are we now looking at the Home Depot, HG is the symbol, has having made some kind of a top at the most recent 52.88 peak possible G, or maybe C in the monthly, but doji, a perfect doji high in the weekly, and a D, ChapmanWave flat base restart with a perfect decline through the left side low bar. Is this something that we're looking at? But then how do you explain the home builders, HGX, even today, having some of them having fabulous moves? Well, the only way you can just explain it is to say, hey, let's look at the bigger picture. Well, the bigger picture says that the HGX, the Philadelphia Housing Sector Index, is in leg D in the monthly chart at 134. Oops, let me get that right. Why did I get that from? It says 134, but it didn't go there. 132.28. Let me just get that right. 132.28, the most recent high. Yeah, 134.48. It was being covered. 134.48. It's right up against the 200-period moving average, which it has not been to since it broke down, since the HGX index broke down. Here it goes. It broke down back in November of 2007, having made a high in 2005, July of 05 at 293.66, peak F top, perfect peak F. Then made a perfect peak. I'm going to be doing a live webinar coming up early June, and it's going to have the left side, right side, price time. I'm going to show how you can use how can I call them? Two straight lines and two curved lines, or to make a cup or an arch formation, or channels or horizontals, and how you can use just these simple tools to really help you. But look at this 200-period moving average. It breaks down. That becomes tremendous resistance all the way through early 08. Even the big spike suddenly in 08, trying to get back there, failed at a peak A-, goes down to 54.31, an 81% decline, manages to rally to this leg D, and where does it stop for the last 3 months? Right at that 200-period exponential moving average. Now, at the same time, if this is going to be a rolling correction, it says that in the sectors that we look at, the ITB, which is the U.S. construction index, bumped into its resistance but snuck one tad higher to go to a leg D at 16.30 in May of this year. May, that's the month that we're in. Just 3 weeks ago, and is having a high-level consolidation. So how do you put this whole thing together? What I want to do is to go through monthly charts. I had a question about a monthly chart, and I believe the question was, not sure of the monthly count of the Dow. Where are we? Is it leg D? No, it's leg E. It's called leg E, but what's very interesting is we've gone fractionally high above the doji of last month. So we went to 13,338. The candle that's forming is testing the 9-period exponential moving average. The MACD is still holding well at 94%, but the M pattern in the MACD is a problem. If I go to major charts, and month hasn't finished, we've still got 2 weeks to go, but what I'm looking at is where will May close out? And in that context, I have to jump over to the VIX index, and this is, to me, there are actually just a couple of really important indicators as far as I'm concerned. I've got literally dozens. For instance, the indicator that I used yesterday said that my ChapmanWave trend gauge, which I base on Richard Arm's trend index, it's just that I used the numbers a little differently, said that there should be a rally yesterday, an intraday rally yesterday, but it didn't say how long it could last for. And it said that today there should be another rally. And it doesn't say how long it should last for. My guess was that we would still close. This would be the first time we actually close up based on this particular indicator. That same indicator gave me an indication this morning to say, no matter where we are, even if the futures are up again, like they have been lately, tomorrow morning, we should still get some kind of a rug pull to the downside at some point early tomorrow. So I like to use many, many indicators. Now, the indicator I've talked about has for so long been the volatility index, the VIX. Well, that VIX says that we've gone into the monthly chart, we've gone into the below 18, went to 13.66. Now we're coming out of it. When you start to come out of this baseline support, which goes back decades, it goes back decades. 1999, it goes back. Holding up my arm, you can't see that. It just goes back to 1992, 1991. So whenever you're in this particular area, as you're coming out of it, making a cup formation or a bowl formation, in other words, the left side ellipse is coming down, arches to the middle, and then it starts on the way back up again. Once you start to take out that level of resistance you got to be careful because that volatility index could go higher. To me, that is imperative to watch. What it says is if the VIX index remains in the 20s through this week into next week, there's a real good chance the Dow will break the 12,600 support and test the 12,520s, which is very important. And then we might be looking at the 12,200s. What if this is, for whatever reason, Europe, who knows, there's a sudden reversal? Well, it would mean that volatility index would have to really pull back, and it's hitting the 200 period moving average right now. The monthly chart has it at 23.56. But let's just say there is a reversal. If that volatility index goes below 1935, somewhere around there, all of a sudden you'll get a counter-trend rally to the upside. Those are the parameters. That means that we can look at the euro, EUR, USD. I haven't given the numbers. I really should. The euro, 1.26223 is the level to watch. That was the low back in the week of the 13th of January. If it breaks that, then 1.24 is the 200-period exponential moving average. Got to watch out for that. That says that the dollar is acting very well, but not great. And I only mean not great in the sense that gold has really taken a huge hit, and the dollar has not yet gone to leg D in the monthly chart that is above 81.78, and I believe it will, because it's leg C in the daily, and the cup formation says that this week there should be a test of the 81.50 to 81.78 high of the 13th of January, the week of the 13th of January. And now let me give you the numbers. The Dow is up 38. It had been up about 60-something points before. It's at 12,665. Now, bear markets, and this phase right now is a bear market phase. Bear markets tend to do this. Every bit of news is treated as bad news. When the tide is going out, they throw that piece of driftwood out, it will not come to shore because it will just keep going out. That's why, in my opening call, might be wrong about this, but so far we've added to the short positions. Just really lucky that today that both our core long positions had a boost and they're doing well. But I'm watching those real closely. But the number of shorts that we've added, plus we were short the Dow. So far, that's the position that I want to take. Now, what I wanted to say also is that the S&P is at 1337, up 8, up 6. The comp index is up 7 at 2901. Gold is down 14. Remember, I spoke about the GLD. I said the GLD looks almost certain to break the up channel support in the weekly, the 2.5-year bull market in the GLD had this fantastic support, and if it broke below it, then the next level of support is 148.27. Well, the GLD has gone to 148.98, and I suspect that it will be breaking that 148.27. That says to me on the monthly chart, we've got to look at that right shoulder failure pattern in the Chapman wave. That's very serious because it will start to make lower lows and lower highs in the monthly chart. Got to watch out for that. I will also look at I'll be looking at some other things, questions in the den, and a couple of requests, Nokia, and some other things I'll look at when we get back. 877-927-6648.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, 877-927-6648 is the number to call now. A couple of things. Let me just do this because I'm going to jump ahead. Question in the den. Basil, can you do a read on DAL? I got in yesterday at 11:11. Okay, so this is Delta Airlines. This is what I'm talking about, this rotation. I mean, it doesn't make sense ever that airlines can make a profit. Hey, if you've been on an airline in the last year, but especially the last 6 months, they are charging for every. It's like when you look at the tax, you go to New York and you're in the hotel, and you look at the tax and you say, wait, the hotel's only X amount, but look, the tax is like another, with everything else, like another 30% or something. The airlines, when you look at the tax on the airline, on the tickets, let's just say the ticket's $100. All the other taxes could be 80%. Now you've got everything else. So this is the first time that they can monetize every single thing. I mean, what a brilliant idea. That's the same as when all of a sudden the telephone companies who are moribund, they were just utility companies, started to nickel and dime you for everything on the cell phone, getting a cover for it, getting a mouse, getting whatever it is. So this is it. So the first time now you've got Delta Airlines going from $3.51 in March of 2009 to the 200-period exponential moving average exactly. I'm going to add these. When I do my webinars and especially the ones that are like the ChapmanWave methodology, I I do include other things as well, but mostly I'm going to talk about lines, curves and lines, and left side, right side, price time match. But of course I'm going to add some of these very important tools like the 200 period moving average. What does it mean? How can you use it? Well, it means here that Delta got repelled in March and April of 2010 at 1490, plummets down to 641. I mean, that's over a 50-60% haircut. Now it's coming back to leg A, B, it's in leg C. So crude oil is coming down. So the economy might be slowing, but the airlines are still going to garner as much profit as they can. I would say this, that if you were in, I would put a simple stop. If it's a quick trade, I would definitely put a stop. You got an 11.11. I'd say give it a few cents below it, whatever your stop was. I would personally put it at 11. If it closes under 11.07, be careful because it could fill in the down to 10.95 before it stabilizes. But the stochastic's at 83%. MACD's good. What you want to see is by tomorrow afternoon or Friday, without breaking 11.19, you want to see it up at 11.63, above the 11.58 high of today. That will say it's probably leg E up in the daily. Got to be a little careful. But what it does is it pushes the weekly to close probably Friday nicely above the left side high of 11.58. That means that the monthly is starting to improve. And I would just go step by step. If it survives any market pullback over the coming few days, because crude oil keeps coming down, that's a great place. It's funnily enough, at this particular point, it could even be a defensive play. I mean, because it's the rotation that's so important, a rotational market. So I hope that helps you. Another quick question was CL. That's CL is Colgate. I believe Colgate-Palmolive. It's at not all-time highs. It's at all-time highs. You know, I used to have all these notated. I've had to redo hundreds and hundreds. I don't even want to get into it. So at 101.94, the high for May, walking the 9-period moving average of support at 94.50. This is saying a defensive, not defense like Raytheon, a defensive stock, meaning it's a stock, it's a household product stock. That people keep buying household products even in bad times. Maybe a little less. Maybe they even go to generic. But in the meantime, it's acting very well. Leg D in the daily. Now, this is what I would say. In my work, there's a technique that I use. It is the channels. I will change the color. I'll teach you how to change the color to show what would be really positive, and I'll show you how to change the color to show what would be really negative on a short-term basis in this case, and then it can go to a different time frame. It's being repelled from the ChapmanWave sell zone, a technique I developed, saying just below the channel resistance, you can draw another little line. And that line tells you that if you were to pull back from there, you've got to watch 99.94 because that's the 9-period moving average. Because if you start to take that out, because let's just say the market, and by now it's this many down days, that we should be up 98 to 103, 105 at this particular point in the Dow, up to 12 points in the S&P. And the market can't do it. So this is very important. So this says, if it's able to hold in this containment area, if you can see my charts looking at Tiger TV, you'll see the containment area says 99.94 is key support. But if at any point in May it closes under 98, be careful, it's run out of steam. And that will say that the general market could also be pulling back deeper. 877-927-6648. I will look at Nokia for one of my subscribers, and I'll also look at a number of things. Fantastic island gas.
What you think about, you bring about. What you focus on grows. If you're committed to becoming an extraordinary trader and investor, then make mastery your outcome. Yes, my best student, Steve Rhodes, became my best teacher. But even more important is what he's taught me, and the time is now for you to take advantage of his knowledge.
Thanks, Tom. I've learned that it's not what we do once in a while that shapes our lives, but what we do consistently. I want to teach you the consistency that exists in the stock, futures, forex, and commodity markets day in, day out. For one solid day, Friday, May 18th, I'm going to conduct an online master trader course that'll teach you how to buy and sell the D point. This one pattern alone, with the single best entry and exit technique, techniques, when combined with my money management strategies, will create extraordinary rewards for you and your family. The course will be archived so you can review it as many times as you'd like, and it'll teach you to become a master. All the details are on the homepage at tfnn.com. Sign up today because mastery is one click away. It's your decisions, not your conditions, that determine your destiny.
Wow! Go get 'em, folks. You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of tfnn.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
There was an arch formation and then a cup formation. This is what I'm going to be teaching, how you can use these. Think of a sine wave sometimes where you go up, make a curve, and you come down and make a cup. So this is what we're looking at. There's a chance that it could get to the body of 80.973. That's the opening on the 27th of April, and right now it's at 80.363. So I'm watching this closely. I can just tell you this, that the 200-period moving average has become a really important 79.72. This whole area has become a very important cushion, trampoline support, because if it breaks and if it closes decisively, I don't mean if it closes under 79.42, if it closes at 78.30, just be real careful, because there's very little support until you get down to the, I don't want to say, there's very little support. So it needs to have a nice bounce this week, something that establishes on a weekly basis that it's able to get above the 9-period exponential moving average, and that is at 80.612. So I want to see it move if it's going to move at all. Well, the technicals are still very weak. This is a bounce as far as I'm concerned. I don't see strength just yet. It needs to prove strength to me. So that was, okay, Nokia. The answer is that we're in leg E up in the monthly chart. That was the question on the Dow. Now, Nokia. It's trading at $2.88. This is a fascinating stock because it made a beautiful peak F top at 42.22, but it actually made a G. Now, there's a technique I use in my CD introducing the ChapmanWave methodology. I wish I had it in front of me, and I don't. There's a technique that I call the smooth peak G. It really looks just like F, peak F, in this case, the high of March 2000 at 58.34. It looks as if it's just continuing, as you can barely see the peak. And then it goes within 3 bars. Usually it's 3. Sometimes it's 4, but usually 3. It goes to a higher high with higher lows, and then that's it. And the rule of a peak G is that it needs to break to a new high, and everyone thinks, oh, it's breaking out. And that same bar, there's a monthly bar, so it takes a couple of days. So that same bar must close towards the low, and then be followed by a very ugly bar that goes way under the 9-period moving average, and that's exactly what it did. Went down to 10.51 at some point. That was in around about August of 2002. Then it went to peak A, B, and then a ChapmanWave restart. This is another technique I will discuss. I won't spend too much time on it in the webinar, but I know a lot of people want to know what happens. I'll explain about the restart. So the restart starts in Nokia in the month of August of 2004, 1089, and then it goes to peak A, peak B, C, D, E, and then at E, it doesn't go under the MACD does not go under the 9-period moving average for a down arrow, so it's a red plus arrow, and then look what happens. It breaks above the high of 23.47, the high of April of 2006, and it spirals higher in what I call a right, I always raise my hand when I say it, a right arm extension, and that right arm extension goes to peak F at 42.22. The previous high was 62.50. At $2.88, it's had a little bit of a pullback. And that little bit of a pullback says to me, I wouldn't touch this stock. But if you are looking at a real short-term trade of percentage points rather than a percentage gain rather than points, it is very close in my 120-minute chart to a bounce from the 288. Oh, it better not close under 260, but in the next 2 days, if it can hold above 280 to 277, I would not do anything until it takes out the high of yesterday of 292. And then, you know what? You can just nibble for a real quick pop to the 9-period exponential moving average of 296. If it breaks above that, the very next level of 301 will be the target, but it could, in fact, give you a very nice percentage gain, then get out of it, because the weekly and the monthly charts are just horrible. Otherwise, I would actually step aside. I just think it's wasting money. There was that one. Okay. So we got the Dow, we got that, we got that, we got that. Island reversals. This is amazing. Look at the stock, folks. GILD. One of my favorites to always miss. Somehow or other, I never seem to get the stock. It's always Gilead Sciences. It's always on my list. And for some reason, it's because it just has these incredible gaps. Look at this island gap, GILD, Gilead Sciences. Is that an Irish company? I think it is. Irish Biotech? I believe it is. Has this gap from the 2nd of February, closes at 49.31, ho-hum, just in leg D, walking the 9-period exponential moving average, and then pop. The next day, the low is 53, and then 2 days later, it goes to 56.50. It hangs around there in a beautiful little pattern, and that's a very positive pattern, which says the 120-minute chart. I wonder if I can do this. I don't think I'm going to be able to. Where's the gap? There it is. It says that the 120-minute chart could very well make a ChapmanWave peak D, so it goes A, B, C, D, and it goes to E and F underneath, and then you've got to be really careful. What happens? It goes sideways, and then it breaks underneath the gap. I don't know if that's the one. Anyway, and then what happens is it closes on the 16th of February at 54.51. The next day, it's an island reversal. This entire area is just, there's nothing there. It opens at 46 round number, goes to 46.88, and then slides down to, within 3 days, to 43.81. Does another ChapmanWave A, peak B, peak C, peak D, peak E, to 48.98, cannot fill the gap, gets into the gap, but doesn't even get close to filling it, pulls back, suddenly has a little bit of a rally, and then it closes at 46.61 on the 18th of April. Pop! Leg F goes to 54.75, and now it's just done the same thing. These are, look at the island reversal there, huge island reversal here, created another one. This is remarkable. This goes down in the books as a really great example of island reversals. Now, this is going to be something that's very interesting. So that's one of the reasons why I've never traded it, is because every time I think I want to get it, it has this big pop or gap down, and I say, whoa, don't even touch it. So the monthly chart still looks pretty good, but you know, it's made this this rectangle formation or cup formation, breaking above the 57.63 high back in 2008, 56.50. Oh, never got above it. 57. It hasn't broken above that previous high. That's going to be strong resistance. So now let's do this. The dollar. Oh, the dollar, and I want to go through these indexes one at a time. The dollar is in leg C. That dollar index has had the MACD go to 95%. That's really strong. The MACD, that's a stochastic. The MACD is still expanding. That says that the dollar will probably hit resistance when it reaches the left side, 81.78 high of, was it January? Yeah, January the 13th. But I want to see how the stochastic over the in end of May to June is able to get above. It's at 55% in the weekly. The MACD is just about to turn positive. So it's so interesting because the monthly is only at 71%. It hasn't even begun to get to 80% in that monthly chart. So I call it the sandwich. The daily does something, and then there's tremendous weakness. What happens very often is that the weekly chart suffers the most, while the monthly chart can sometimes remain quite stable. And that's usually what happens. They have to wait a long time for the weekly chart to catch up. So what I'm looking at is the tremendous support in the dollar between 80.42 and 79.50. 79.48 is the 200-period exponential moving average support in the weekly chart. I suspect May is going to make leg D up, and this is going to try to put this whole package together. If you go to the TLT, now I know I jump around a lot, but I like to look at the whole puzzle. I've made it really easy. I've spoken about the volatility index. To me, it's all about the volatility index. But in the meantime, back at the ranch, the TLT has gone to an expansion. Now, this is the way I do my expansions in the ChapmanWave. I take it from a low bar, in this case, the 19th of March at 109.69. I take it to peak B because it was a pretty sharp pullback, but two things happened. One is it pulled back for 3 days, didn't even get close to the low of 109.69, it went to 110.57, and then within 3 days, and that to me is very important in my work, not only did it break above the left side high, the MACD and stochastic really took off to the upside with the price. Now should I get rid of that? No, I'll keep it for now. So then what happened, it went peak C and D, pulls back, goes to E, and then starts a brand new, this is not an instant restart, but a brand new buy signal right there in the low of, this is the TLT, the Lehman 20-year T-bond fund at 115.69 the 20th of April, and it's gone to peak A, B, C. There was an alternate wave count, but that's okay. There's nothing to worry about because you just want to be careful. The whole idea of the ChapmanWave is that you want to be prepared. My subscribers for years now, we've hardly ever been surprised. I might personally have got it wrong by just not getting my short in at on the DXD when a peak D was made in the ChapmanWave, by being a little slow to do that. But the waveform, within 200 points, we're almost always getting to the right side of the trade. So only reason being, I use the MACD stochastic and I use the waveform, the left side, right side, and all sorts of things like that. But what's really important about this is that the breakout, I've been talking about the question of whether money will come out of stocks and go into bonds. If that's the case, safe haven, well, it is a safe haven in a sense, and that says that bonds holding at 94% in the stochastic and the MACD, the expansion I use takes it in that extremely sharp breakout above the left side high that occurred with the doji of the 9th of April, and then the breakout close above it on the 10th, said to me that I can use this as an expansion. And 261 is really 261, that's the percentage. When we get to that level, I anticipate very often that not only will you go to 261, you'll actually break above it, and then you've got to be careful. And in this case, that would say above 122.90 in the TLT. This is peak D. There's a little bit of resistance right now. And the most important thing is that within the weekly chart, you've really got a sideways, call it a flag pattern, or I like to call it a rectangle formation. We're trading within that, and this is this is leg A. Oops, I'm sorry. A, B, we're in leg C in the weekly chart. That says we should go to D. D should take it to between 124 and 125.20. 125.03 was the previous high. Then we've got to be careful. We failed at peak C before. So I'm going to be watching this closely. But the monthly chart, this is so fascinating. Why? Because that monthly chart has the pattern I call the falling axe. If, in fact, the TLT breaks and closes above, not 125.03, it really has to do it. It has to get away from the lip between 123.15, the high of December of 2008, and the high of October of 2011. So it really has to get to the 126.30 to 127.10 area. If it closes above that, I'd be looking at that as leg C with a D still to come. That's really interesting. So that's the, and then the high-grade copper. I was asked to do the high-grade copper, swing around, see, no calls, 877-927-6648. I don't want to suddenly get calls right at the end. Well, I've covered everything, so that I wanted to cover. So now what we're going to look at is in the U.S. T-bond 24-year bull market up channel, but it's a 30-something year up a move from the lows. So what we're looking at is we're making this cluster formation up against the resistance, this very long-term channel resistance in the sell zone. We're not getting a pullback. That says the pullback has to be considered leg E. Oh my goodness. 145, we've gone to 146. We're in leg E or C. I'm going to use the most conservative count. I'm calling it E in the monthly. So this is, and the stochastic's very strong, but it's a little weaker than it was the previous high, but it's still strong at 86% in the monthly chart, and the MACD's making a potential M, this dolphin pattern, making a potential M formation. So, wow, I've covered a lot. I also wanted to cover, so that says that the support for bonds right now is at between 136 and 132, and really strong, because if it breaks 132 in the next 2 months, be careful. Something else is going on. Inflation is ahead. So I got that. Okay, this is what I wanted to do. Is that a question in the den? AZO. Okay, we'll look at AZO. AZO, I used that. I didn't want to do that. Give me a second. Okay. AZO is AutoZone. AutoZone right now is at 387.98. There is a resistance at in this downtrend line that I've drawn. It's up 5.50. It's above the 9-period exponential moving average in the weekly chart. Now, we have a position in it, a short position, fairly tight stop. I think it's 1% or so. Reason being AAP, which is Advanced Auto Parts. Yeah, Advanced Auto Parts took a big hit from the 93.08 high, peak F high on the week of April the 27th, and I suspect that we could very well be looking at AZO having made some kind of a top of significance, but it won't say a word about a top until it breaks under 375. That's 12, 13 points lower. I'll be back, 877-927-6648. Be right back. Now, I'll finish up on AutoZone.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. We're back. Basil Chapman, Dow's up 46, S&P's up 4, and I just had an email from Greg who wants to know about the Dow monthly count, and I said to him, I bet you missed the peak in February of 2011 at 12,391.30, and the slightly lower one the next month of March at 12,383.46. Your only obligation in the ChapmanWave is to make absolutely sure you count each successively higher peak or lower trough. If you miss one, you can land up expecting a D when in fact you've already hit a D, and that can cost you money. Because you know at peak D, you've got to be careful. At peak D, we had that pullback last year, April, about 17% from 12,876 to 10,402, 404. That was about 14%, I can't remember. So So, yes, so far this month, this is a high. We've got to see if next month makes a lower high bar. Then we've made peak E in the daily, in the monthly, and a peak E in the weekly if we don't go above 13,338. Now, ASIO, just a question again, and missed the analysis. Gold says in the den. The analysis is that this trend line right here that I've drawn in from the high of 399.10, 399.10 twice. I call that C1 peak. C1, C2 is a high. That says to me that you could have a sharp pull that you could break down if you went under the 9-period moving average. So what we've done, we've gone under the 9-period moving average for AutoZone. It's run back up, but I'm going to put two lines here. I didn't want to overdo it this morning when I showed subscribers, but I was looking at one and then a green line above it. And that says that if it's able to clear this green line, you got to be careful because it's not done with its bull market yet, because it could still go a little higher. And that would say if it's able to go into the 390 area, 390.24, that and start to close above that, I'd say be careful, only because it's had, this is the biggest pullback it's had in quite a while. And the 120-minute chart, I think I showed that this morning, I'm not sure, said that there could be a bounce. I was expecting that the bounce would fail. The bounce would fail under 389.64. We'll see what happens. Hey, you're going to do with your 1% on a $387 stock. I think that's a pretty good risk to reward, because if it starts to fail, closes Friday underneath, certainly if it closes under today's candle 376, goes to 375 by Friday afternoon or Monday morning, that says, okay, be careful, because that 9-period moving average could finally become resistance. And then you're looking at 355 in the monthly chart. The key support that it's not broken under, that 9 EMA, since it started its move to the upside, back on, isn't this a wonderful tool, this 9-period moving average, since December of 2009. So this is AutoZone. Can't mess around with things like this. You've got to have fairly tight stops. You want to know what's going on. So that's that, and I wanted to do this. Okay, Larry Pesavento is coming up straight after me. And Psycho Date's got Fibonacci's got the Gartleys, the Tiger Gartleys. It's got the butterflies, everything that he will be talking about. Later in the afternoon, you've got Dave White. Now, David looks at the extensions. He looks at something a little differently. And what's absolutely really critical about David's work is that his power vector indicators are really what he discusses, and he goes into great detail about. Then 4 o'clock this afternoon, 4 to 6, Tom O'Brien wraps the whole thing up. Let me give you my parameters real quickly, as we're about to run out of time. And don't forget, my service is the opening call. Just a very comprehensive look every day at the markets. And we have trading positions so far, except for this one, which might go wrong. We even managed to short, just based on the ChapmanWave, a stock 3 days ago at its 5-year recovery high. And it seems to be working, but you go one step at a time. Dow, watch on the upside, 12,820. It's got to close above that in the next 2 days. If it fails and it takes that 12,600, be careful, 12,520 is next. Thanks for being here, folks. Stay tuned for Larry. I'll be back tomorrow afternoon for Tom's show at 4 and Friday morning at 11.